What's up, fam? Hope you're doing great. So here we are for another video, and this video will be talking about how to master flip zone entry using CMC. Because we have this order block entry, we have a lot of style, a lot of CMC traders use a lot of style to enter their trades. So I thought that I can do another video where I will be explaining how to master flip zone entry. And flip zone entry is one of the methods that can help you to improve and to just take your trading skills to another level, right? So let's go just right into it. Let's go right into it, and we'll be discussing how to master this flip zone entry. We have the first case study for sell scenario with only one CMT smart money trap. You can see that for order block entry, order block traders, right? Using CMC, of course, supply and demand. So you can see, for example, when you have this demand zone, for example, you want to buy, you'll be waiting for price to reach your demand zone, and from that demand zone, you'll be willing to buy, right? You'll have your entry somewhere here, and then you will be willing to buy, right? So sometimes you have this reaction from the demand zone. Let's say you want to buy, you have a reaction from the demand zone, and then price just breaks your demand zone or your supply zone. It just depends on the case, right? And you have another break of market structure. So in this case, a lot of traders will be waiting for example, another demand zone below to buy, and you see some in other case that we are bearish and they are just willing to buy because they don't know how to re-enter trade after the demand zone are broken, and they'll be just waiting for another demand zone below, and they'll be willing to buy from there because they don't know how to go with the trend. Because remember, the trend is your friend, and if, let's say, external structure you are bullish, but in the internal structure you are bearish, and you don't want to wait until price reach another demand zone just below so you can try to buy again, but you have a signal that right now we are bearish, and you can go with the bearish momentum so you can have an opportunity to enter your trade again, right? So you can see we are talking about flip zone entry. You can see, as you can see on the picture in front of you, we have this demand zone, and when price came on the demand zone, price reacted from this demand zone and gave us like a reaction, a little bit, a few pips above, and then price broke this demand zone. So we have this break of market structure or break of structure, right? So you can see that I've written here that you must see a reaction on the order block, otherwise there is no flip zone, right? This is a prerequisite that you have to see a reaction from the demand or the supply zone in a case of buying, or demand zone in a case of selling, right? You have to see a reaction out of this demand or a supply zone in order to look for a flip zone entry, right? So after we have this break of market structure, and generally you will see price engineered liquidity just below the order block that will be on that reaction. You see price started engineering liquidity. It can be a trend line liquidity, a double top liquidity, a double bottom. It can be equal highs, equals, whatever it is, but you will see generally price engineer liquidity below your zone, and you know that liquidity below or above your zone in a case of buying or selling is a nice confluence, because you want to see liquidity that must be manipulated before price reach your entry, your DP or your POI, right? So you can see that price will engineer liquidity just below your zone. In this case, price engineer liquidity below your zone, and then we give you another break of structure, and that's where the trap is. Because a lot of traders, when they will see this break of structure, you can see that I call this first break of structure. Why? Because price didn't reach our order block, our POI, but price engineered liquidity and broke the previous low. So a lot of traders will mark this out as break of structure, right? And then they'll be willing to buy on this other block that will be just right here. They'll be willing to buy from this other block because they'll be like, okay, we have our break of structure and price already reacts, so I'll be waiting for price to come back on this zone and start selling from here. But they don't know that this is actually smart money trap. Smart money trap wants you to sell from this zone because they know that they already create for you a first break of structure and you'll be just following it, not knowing that this is actually liquidity. And the right way is just to wait for price. Sometimes you have a reaction from this smart money trap, you have a little reaction, and then price will end up breaking this other block, reacted on your demand, because this demand is supply, and we call this demand to supply flip, right? This demand to supply flip zone. Price will come on this demand, react, and give you a reaction from this demand to supply zone. And the second case, you will see that here we have a case study for sell scenario with two smart money traps, right? Look, we have a reaction from our demand zone, and then you can see that in the first case study, look, a price, when we have a reaction, our order block is on the reaction that we had, right? That's why we are waiting. That's why we have our pure high. We're waiting to sell from this one. But for the second case, you can see that we have a reaction, but this is actually also a CMT. We will have other smart money trap below. This actually also liquidity, cause in some other cases, you will still have like imbalance or fair value gap, wherever you call it. You will still have imbalance or fair value gap right here. So price need to fill out this imbalance before starting moving downside, right? So you will see that we have a reaction, right? Break of market structure. Price will start engineering liquidity below, and even though you know, okay, this is actually CMT, because I will not trade from here, I'll be waiting for here from for this zone, sorry, and then price will reach this zone, this order block where there is your reaction, and give you maybe a little pullback, and then break this zone and go to the order block above, because there's still imbalance that need to be filled, and then after that you have a reaction, right? This might seem a little bit tricky, but when I'll be going on the market on the chart, I'll be showing you everything, and you will see that it's quite simple. And this flip zone entry will allow you to take trade and not missing trade, because a lot of CMC traders, when they have this, for example, you have this retracement, they'll be waiting for extreme zone, extreme order block, right? They'll be waiting for price to retrace up to this extreme order block above and then start selling from there. But price will not always retrace from that extreme zone, but price will be reacting from some flip zone and then give you a reversal movement. That's the same, but here we are just in a buy study, right? We have our supply zone, price reaches our supply zone, gave us a reaction, and then gave us a break of market structure. You see, you must see a reaction on the other block, otherwise there is no flip zone. And then price gave us this movement. We can see price engineered liquidity. We have this first break of structure because price didn't reach our actual zone, our actual pure high, and gave us a break of structure. After that, there will be traders that will be willing to buy from this order block that will be here, not knowing that this liquidity, because our real zone is just below. And then they will have a small reaction, smart money trap, take them out, react on our supply to demand flip, supply to demand flip zone, right? React on our supply to demand flip zone and go to the upside. And there is the second case study for buy scenario with two CMTs, right? We have a reaction from our supply zone and then a break of market structure, then price engineered liquidity above our the other block of the reaction. But this also actually a CMT, right? Because we still have some liquidity that must be engineered here, and we have another block just right below, right? We'll be showing all of this in the chart, and you'll see that this is quite simple, right? So you will see that price will come, engineer liquidity here, come and then broke this, just price will break this CMT and then break this other zone, react on our actual pure high, and then which is our supply to demand flip, and then react to the upside, right? So just keep in mind that you have supply to demand flip and demand to supply flip, in case you want to buy or to sell. And for both of them, we have two cases scenarios, like two case studies, right? When you have only one smart money trap, and the other one would be when you have two smart money trap. Let me just try to go on the chart, and we'll be seeing something, right? So here we are on the chart, right? I'm actually on hold USD, and I'm in a 5-minute time frame, right? And what I want to say right now is that this works for all the time frame. Can be in lower time frame, in higher time frame, 1 hour, 2 hours, 4 hours, 30 minutes, 15 minutes, 5 minutes. It works for all kind of time frame, right? You can be trading lower time frame because you are a scalper, for example. You can be trading higher time frame. It works for all of them, right? So actually, I'm on hold USD right now, and I'll be showing you a trader I sent to my team on Discord, right? Let me just play back the price so we can go with it. Let's just go right into it. All right. So you can see that this is actually my Asian session range, right? This is my Asian session range, and I have the low of my Asian session range here. So when I usually trade, I will be waiting for London, because time, okay, also the time is so important. I'll be waiting for the high or the low of Asian session range. So in this case, you can see that price broke or manipulate the low of the Asian session range. So after that, we are willing to see the price to manipulate the high, right? So let's go. Let's play the price. The Asian session range low is manipulated, right? And we can see that we have a kind of reverse movement, because right now, okay, let's go. Now we can see that the Asian session range low is manipulated, right? And boom, see, you have this. The Asian session range low is manipulated, right? And you can see that price just right here react on this 5-minute order block. We have a 5-minute order block here, gave us a kind of reaction, yeah, and broke, just price breaks this this previous high, sorry. And then you can see that right here you have what? A break of structure, right? I mean internal structure, right? You have a break of structure, and this is a sign that in internal structure we are going now bullish, because we manipulated the low, so price is definitely going to manipulate the high of the Asian session range, right? So I have my break of structure, I have my confidence that I'm going bullish on this one. So what am I doing? I'll be looking for like a position for me to go and start buying until price will break just my the high of my Asian session range, right? So look, we have this. Yeah, you can see that now. All right, now look what I told you. We have a reaction from this supply zone. Price broke the supply zone. We have our break of structure or break of market structure here. We have this price came after and didn't reach our pure high, because we still have this imbalance right here, right? Our reaction is here, and this is the order block of our reaction. Price didn't reach our supply to demand flip zone and gave us another break of structure. That's what we call a first break of structure, because price didn't actually reach our zone, right? So we have our first break of structure, and what is next then? We have this first break of structure, price starts retracing. Remember, we have our reaction, and in the first case study, the order block will be on the reaction, right? So yeah, price started retracing. Price started retracing. Remember, I want to say something here why price is retracing. When you are a CMC trader or supply and demand, you're trading supply and demand, all right? When you have this change of character, break of structure, and when you have this change of character, break of structure, a lot of CMC traders will be waiting for price to come back on this order block just right here, because they are waiting for price to react on the extreme zone that is here, right? Because there's still imbalance below. This imbalance that must be like filled out, right? And they're waiting for price to react on the extreme zone. But as I told you, price will not always come so down, so low. So price can react just on flip zone and go up. That's why you should master that's why you should master flip zone entry, because you'll be losing and missing trades, because you'll be waiting for price to react on the extreme zone, on the lower zone or the higher zone. In case you're selling, you'll be waiting for price to go on the extreme zone, but you should know that price will not always go on the extreme zone, right? That's why you should master flip zone. Let's go. So you have this. You can see that okay. Price came on the price came on this. Let's take just this, right? You can see that this our CMT, right? Price came, reacted on the CMT, didn't break this previous low first. Price came again, because we know that this actual are CMT, right? Because price didn't reach our actual order block. Price came again and react here and gave us a first break of structure, right? So what is next? When you have this, okay, I have my confirmation, I have my break of structure. Now I'm willing to sell, to buy from this zone, because price already react on the previous order block. Bam, that's why you are taken out, because right, you can see that price came on the CMT, gave us a reaction, and boom, because this was not the actual order block, right? And this was just liquidity. You can see that now the liquidity is just manipulated, taken out. Then price will react on the actual flip supply to demand flip zone, and then you can see that from this zone we have the actual movement. As I told you, we want to see this Asian session range high being manipulated, because we already manipulated the low, right? So let's see. That will be my first, actually that will be my first TP, but my full TP, I think it was in 15 minutes, because I saw up there was still imbalance that need to be filled. Yeah, I had this imbalance and I had this supply zone here, so I just saw this as my final TP, right? Because I had this imbalance that must be filled. And you can see that the first TP is actually 11 hour and the second TP is over 20 hour, right? You can see that it's almost 3 pips of stop loss and 48 pips on take profit. That was the magic behind this trade. But I have a lot of examples that can help you to master these things. Let's take this one. You know, the math is simple here. You have the theory. Let's just go right into it. I will not go too much in details, because I gave you all the details, but I want to just show that these things actually work, right? You can see that price reacted first. I will start here. Price reacted on this 2-hour supply zone, so we know that we are bearish on this, and all of this demand zone, right? All of this demand zone, you can see that this internal structure, and price is trying to react on this demand zone and try to push up. But when it will react on this demand zone, price will give us a reaction, and then boom, we have a break of structure or a break of market structure. So what are we waiting for? Price to react, give us engineer liquidity below, and react on the order block that is on our reaction side, right? So see, you can see that price came, all right, and then what is next? Gave us this. You can see that we have imbalance here. Boom, we have imbalance here. And when you see this, it'll be like, all right, price react on this other block. We have another break of structure, so I'll be willing to buy on, or sorry, to sell on this one, because I have my break of structure. And this will be just all like nonsense, because we still have this 3-minute demand to supply flip zone here. Remember, price reacted on this demand zone, and we didn't have another reaction from this zone. So price came, gave you a little reaction, a little pullback on this zone, because this actually smart money trap. They want you to be confident, and then boom, you're a break of market structure, and then price reacted on now a 3-minute demand to supply flip, and from here you have the actual reaction, right? So we will target the previous low, and you can see that is actually 11 hour, 4 pips stop loss and 48 pips TP. You have 11 on this, right? I have another example. I'm just going quick on this so you can see this actually GJ. The last one was here, I think. This GJ, let me just look for it. Yeah, I remember I had an example on GJ also. Yeah, that should be here. So the two examples that we saw, price reacted on the order block that was on our reaction side. When price reacted from the supply zone in this example, we are waiting for price to react on the order block that is always like, which is here, and then we have a movement. So let's see this. I will not even play back the price, but I will just be explaining on this, right? So we have our supply, we had our supply zone. Price gave us like a reaction, and then boom, you have this break of market structure, right? So you're waiting for price to come back and react on this other block, right? But the problem with this case scenario is we still have imbalance here. In 3 minutes, you can see that, if I can go in 5 minutes, I think I can go in 5 minutes, and you will see that we have imbalance just below our zone. What's going on with my network? So sorry for that. Yeah. So you can see in 5 minutes that we have imbalance below our zone. We had a reaction on our supply zone, but we have like So you can see that here we are. You can see that we had a reaction on our supply zone, right? 15 minutes of the block, and then we have this break off structure just right here. So price should come and react on another block that is on our side and then continue to the upside, right? But in the second case, remember that when we have this imbalance, right? So price will come lower, manipulate this liquidity, fill out this imbalance, and then react from this zone below and go up. That's the second case. The second case, price is not reacting on the other block, which is on the side of the reaction, but a little bit lower because there's still imbalance that must be filled, right? Let me just play this part and I will show you. And I want to show you something here. Yeah, so you can see that we had a reaction, and even if I want price, let's say I want to take a trade on the other block, which is on the reaction side, I can still have a trade on that zone, right? But you will see that the actual movement will take place after price taking out liquidity and filling out the imbalance that was below. Let's say, all right, I want to trade as the first case scenario, which is here. I have this other block, right? You can see that price gave me a reaction, gave me a break of market structure, right? Reaction, break of market structure, pull back. I have the other block on the side, and then gave me this actually a 5-hour trade. But I didn't take this trade because I saw the imbalance below, so I waited for price to fill out this imbalance before entering any buy trade, right? Sorry, you can see that. Yeah, let me see this. You have almost 14 pips here, and let's try to get this previous. We can try to get this look just right here. Yeah, you can see that even with this trade, you have almost 5 hours as a trade, which is like a good risk reward, right? But you can see that after just this movement, price gave us a retracement, and you can see that we had another order block just right here, which is empty because they know that you saw this false break of structure because price didn't actually react on the supply to demand flip zone. So you see this reaction, this break of structure, and you're like, okay, this is the next order block, so I'll be entering like a confirmation entry on this zone. So you see that you don't even have any reaction from this CMT, and boom, price took out this liquidity, fill out this imbalance right here, reacted on the actual supply to demand flip zone, and from here you can see that you have the actual reaction. See the movement to the upside, right? So if you know what to enter like a trader, good traders know, they know how to enter, but greed traders know when to exit a trade. So if you are like good reflex, you can just go in here and then you know that, okay, I should be out from this other block because price can retrace and reach the actual other block, and then I will have another entry. Actually, this was a confirmation entry that I took on this trade, but I will not be explaining this because this is not flip zone, right? And our subject today is flip zone entry. And I want to just tell you something that also the time is so important when you are entering a trade, right? When you're entering a trade, the time is so important. You can see that, all right, this almost orange color is like Asia, the green is London, and the yellow is New York. You can see that, all right, we have this Asia that is manipulated, right? And price reach our zone when our POI, point of interest, when London opens. That's 11 o'clock, because I'm on GMT plus 3. So this actually 8 o'clock. When London open, we have this reaction. Boom. When London open to the upside, you can see that price will for London to reach my zone. So this actually another confidence that, all right, London is opening and price is reaching out my zone. So I'll be expecting that volume from the opening of London to give me a kind of nice reaction from my zone, right? And I think it should be the same with all USD and Euro USD. For all of these trades, you can see that also the time is so important when you're entering those trades. Let's check. Let me check that. Let me just check this about the time. Yeah, you can see that we had this, right? We had this movement. Let me talk about this trade. The trade we discussed, right? We have this movement. Asian low is manipulated, and you can see that price reaches our zone on pre-London. During pre-London session, price reached our zone and gave us a movement to the upside. And when New York came with another volume to the upside, continue what London just started, right? And also Euro USD, I think, should be same. So also the time when you're entering a trade is so important. When sometimes price can reach your entry or your order block, but you can see that the time is not there, right? It's not reaching like at a good time. I can say that like that. So you should be aware. We should be aware of that and just wait a little bit before entering any trade. You can see that, okay, we have this reaction, we have the reaction, and price reaches our zone during New York, because London was bullish, and when New York just started, right, we had a reversal in the movement. So you can see that price reaches our zone during New York, and then New York came with a bearish momentum. London was bullish and New York was bearish, right? So when price reaches our zone, you can see it was during New York, and then we had this reaction to the downside. So you should be also aware of these things about time, and that's so important, because sometimes you can have a bullish momentum during during London, and a bearish momentum during New York. We have this kind of like reversal on many pairs, especially for EU, OD, USD, Euro USD, and gold. You will see, just check on your chart, and you see that like you have this kind of reversal when there is this session from a session to another session. So should be just aware of that. So that will be all on how to master flip zone entry. I will catch you up for another class. See you.